of the primary market, because these three listings have become these three debutants today. And let's talk about the management of one of these new listings, and that's Dave Accelerator. Listed flat, but the stock has picked up some momentum, about 5% higher right now. 64 rupees per share is where that stock is. Let's interact with the management. We have Mr. Umesh Uttamchandani, the MD at Dave Accelerator, joining us. And Mr. Uttamchandani, thank you so much for your time this morning, and congratulations on the listing. Help us understand what the allocation is for. We understand a large part of it is for fit-outs for new centers and the remaining for debt repayment. But what could be the triggers for growth going ahead, and what is your outlook now that you're listed?
First of all, thank you so much for inviting me. It's a moment of pleasure and extreme happiness for us as we get listed today. We are in the auspicious Bombay Stock Exchange seminar hall, where we just finished the listing ceremony. So I'll just give a brief as to what we do. So we are a managed office space provider, wherein we host mid to large size enterprise customers in an unorganized, non-institutional developers market. Largely, we are into tier 2 cities market. As we are already aware that the country is growing at a rapid pace. So when we want to shift from a $4 trillion economy to a $10 trillion economy, it is inevitable that the tier 2 cities need to contribute at a faster pace. And that is where the majority of the triggers for our future growth would lie. We are expecting to deliver 9.5 lakh square feet in the next 18 months of time frame and horizon, and that is where our bottom line would increase significantly, as well as our top line would increase massively in the next 18 months of duration. Now, with the capital being infused in the system, we would grow at a much more faster pace, but with a caution of supporting our investors and shareholders and ensuring that we are growing and ensuring maintaining the support that they have given towards us.
Umesh, hi, morning. This is Shrishti also joining in. Firstly, congratulations on the new listing. But Umesh, let's talk about your financials then, because now that you are a listed player, we can talk more on that. 143 crores was the IPO. 73 crores has been allocated to fit-outs for the new centers. Could you outline the timeline for the deployment and the expected return from these investments, since you were just talking about that the top line will grow in the next 18 months or so? How can we see such investments definitely giving a way up for your overall revenues?
Sure, Srishti. Interesting question. So the capital growth that we are going to pump in of 73 crores is going to be done in the next 18 to 24 months of time. We have already earmarked assets across multiple cities. Naming few of them would be Ahmedabad, Jaipur, Pune, Chennai, wherein we are going to expand with the next centers. In the next 8 to 10 months of time frame, we already have at least 5 lakh square feet of area which is going live, which translates into roughly 4,000 seats getting into operation. And all of that 5 lakh square feet that I'm referring, 85% of that is pre-booked. So that gives us the conviction that the next wave of growth would be coming in not only from the supply side, but also from the demand that we have already pre-booked in the last 6 to 8 months of time frame. So that gives us the impetus to and say this with conviction that the next wave of growth is not just a statement, but it is supported by the fact that the customers have already signed up the new assets that we are coming up with.
And Umesh, also help us understand, now that 35 crore rupees is your allocation towards debt reduction, how much debt will still be on the books, if at all, after this?
So our plan here was that we will repay the 35 crores of debt. On top of it, we have some fixed deposit and mutual funds in the accruals. We would also liquidate that and pay that towards the debt. So that would actually reduce the debt by 55 crores. So from a current debt of 127 crores, we would repay 55 crores. And the remaining debt also we would be planning to repay it in the next 12 months of time frame. We have already received a term sheet from a fund called Prop FTX of 50 crores, which would help us reduce the debt further. And this collection of 50 crores is coming from our PropCo and OpCo model that we had engineered in Ahmedabad. So it would significantly reduce down the debt from an interest outflow of 16 crores in the last financial year. We would reach to actual outflow of 6.5 crores in the coming financial years.
And thanks once again for joining us. Once again, congratulations on the D Street debut, and we hope to chat with you more often now.
Thank you so much, Srishti, for kind of inviting me and ensuring that I share my thoughts with the investors and shareholders.
Thanks for your time today. Okay, on that note, we'll slip into a very short break and be right back, talk more about yet another new listing just on the other side.